Hi friends, today's topic is subsidiary books. Subsidiary books means what? Let us see. When we maintain accounts, when there is any financial business transaction, first what we supposed to do? We should record. In which book we record? Small firms record them in journal. And large scale firms, they record the transactions in subsidiary books. So be clear, subsidiary books are used by large scale organizations to record financial business transactions in the books. Then next step is we have to classify them. In which book? Ledger. So ledger is common for small firms as well as for big firms. Now today's topic is subsidiary books. Then why big firms maintain subsidiary books instead of journal? Because in journal there are some drawbacks. What are they? Let us see. Suppose XYZ Limited is one public limited company, big company. Now in the month of January they have some transactions. 500 times they purchased goods. Sometimes they purchased for cash and sometimes they purchased on credit basis. Total 500 purchase transactions are there. Similarly, 1000 times they sold the goods to customers. Then 10,000 cash transactions are there in January month. Sometimes cash is coming, sometimes cash is going. Total 10,000 cash transactions they have. Total how many transactions? 11,500 transactions. So all these transactions, if they record in journal book, then what is the disadvantage? Let us see. First problem is journal book is maintained by one single person. So his workload increases. It affects his performance. He may do some mistakes. Similarly, journal book becomes bulky and it is very difficult to locate a particular transaction from journal book. And for example, take these purchases. 500 times we purchase in January month. Therefore, 500 journal entries we should write. What is the entry for purchases? If goods are purchased for cash, then purchases account debtor to cash account. If goods are purchased on credit, for example, goods are purchased from A, then what is the entry? Purchases account debtor to A account. Goods are purchased from B, purchases account debtor to B. Goods are purchased for cash, purchases account debtor to cash. How many times you are going to write like this? 500 times. Once you observe, in all entries, debit account is common. We know that purchases account comes in debit. Even though again and again we are writing the same account name in debit side. We are repeating the work. Laborsome process. And number of times we should write the narration. Being goods are purchased for cash, being goods are purchased on credit. So while writing the transactions in journal book, there is one difficulty. Not only that, after journal we prepare ledger, no? In ledger, when you are posting all these transactions in purchase account, we said we post them. Observe, in all entries, purchases are in debit. Therefore, debit side we should post to cash, some amount to A, amount to B, amount to C. Like that, how many times you are going to post? Since 500 transactions are there, since 500 journal entries are there, 500 times we have to post. So it is double work. First time we are writing in journal, then same transactions again we are writing in ledger. Time waste process. And finally, assume that debit side total is 5 lakh rupees. Then same total appears as by balance carried down 5 lakh rupees. When? At the end of the month. For example, 31st January 2018. So the use of purchase account is on a particular day, total purchase amount we can know. But in this 5 lakh rupee, assume that cash purchase is 3 lakh rupees and credit purchase is 2 lakh rupees. Can we know these values by preparing purchase account? No. Only purchases amount we can know, but out of the total purchase value, how much is for cash, how much is on credit basis, we cannot know. To overcome all these problems, large organizations maintain subsidiary books in the place of journal. Then, subsidiary books are also known as books of original entry or books of primary entry. You know, for journal book also same names are there. Why it is known with these two names? Because when there is any financial business transaction, first time, originally, in which book we are recording them? In subsidiary books. Subsidiary books are also known as day books. Why? Because on day wise we prepare these books. Whenever there is a transaction, we record that in the books. And subsidiary books are also known as special books. Why? Because all activities are divided into some groups. And for example, purchases transactions, sales transactions, purchase returns transactions, sales returns transactions, cash transactions, like that. For each transaction, a special book will be prepared. For purchase book transactions, we maintain purchase book. For sales transaction, we maintain sales book. Since special books are maintained for each type of transaction, these books are also known as special books. Now, total, how many types of subsidiary books are there? 8. First book is purchase book. Purchase book is used to record the purchases of goods. We can buy goods for cash or on credit basis. When goods are purchased on credit basis, then we record them in purchase book. Similarly, sales book. When goods are sold on credit, we record them in sales book. Purchase returns book. We purchased goods from supplier on credit basis, and now since the quality is not up to the mark, we are returning the goods to him. We record them in purchase returns book. Similarly, sales returns book. We sold goods to customers. Now customer is returning those goods to us. Then cash book. By seeing the name only you can guess what we are going to write in that. All cash transactions, cash receipts and cash payments. Similarly, bills receivable related transactions, we record in bills receivables book. Bills payable transactions, we record in bills payables book. And now the last one is what? Journal proper or journal residual or general journal. What we record here? The transactions which we cannot record in first 7 books. We record them in journal proper. Now in my present class, I am going to explain about first 4. We'll learn about purchase book, sales book, purchase returns book and sales returns book. Now, first book is what? Purchase book. Let us see how to prepare one purchase book. This is your question. Now, purchase book looks like this. These are the columns. Now, before going to solve the problem, you should know some important points regarding purchase book. Purchases are of 2 types. Sometimes firm purchases goods. Sometimes firm purchases fixed asset. What is the difference between these two? Let us see. Suppose there is one stationery shop, Ram and Sons. They do business with what? With stationery items, books, pens, papers, etc. So the products which are meant for resale purpose are known as goods. And in stationery shop, owner uses one chair, one fan, some racks to keep all these stationery items. All these items are known as fixed assets. Will they sell them? No. So these products are useful to run the shop. Therefore, be clear with these 2 points. Goods means what? The products which we are going to sell to customers. Fixed assets means the assets which are useful to run the business. Now, regularly firm purchases goods and rarely we buy fixed assets. Therefore, if there is no proper information in the question regarding what we are buying, then what is our assumption? We should assume that goods are purchased. Then next, goods may be purchased for cash or on credit basis. Similarly, fixed asset may be purchased for cash or on credit basis. Cash purchases means what? This is our firm. From supplier, when we are buying goods, what are coming to us? Goods. And assume that immediately we paid cash. On the same day, goods are coming and cash is going. For us, these purchases are known as cash purchases because we paid money immediately. Sometimes, instead of giving cash, we may issue a check. That also comes under cash purchases only because transaction is completed there. We paid the money. Then, credit purchase means what? From supplier we are taking goods, but payment is postponed. On the same day we are not going to pay the money to him. We took some time. After 3 months, after 2 months, we are going to pay that amount. Clear? Similarly, fixed asset also we may purchase for cash or on credit basis. Means total how many types of purchases are there? 4. Goods purchased for cash. Goods purchased on credit. Fixed asset purchased for cash. Fixed asset purchased on credit. Now, all these 4 types of purchases he gives in the question. We should not take all in purchase book. Remember, when goods are purchased on credit, only these purchases we should write in purchase book. Other three purchases, where they go? Goods purchased for cash. This is cash transaction. Total 8 subsidiary books are there. In cash book, we should record this transaction, not in purchase book. Similarly, fixed asset is purchased for cash. This is also cash transaction. It goes in which book? Cash book. And when fixed asset is purchased on credit, we should record that in journal proper book. Clear? Therefore, whenever you see one transaction, don't blindly write that in purchase book. Observe all these points. What we are purchasing? Goods or fixed asset? How we are buying that? On for cash or on credit basis? If goods are purchased on credit basis, then only we should consider that transaction. Then how to know that goods are purchased for cash or credit? If any supplier's name is given, then that is credit transaction. If supplier's name is not given, it is cash transaction. Why like that? Because when we should remember that supplier's name, suppose we went to one shop, we purchased some goods, we paid money. Then do we ask his name? Do we remember that shop name? Not necessary. Because transaction is completed. We paid the money there. When we should remember them? If we buy on credit, then only we should remember that shop address or owner's name, etc. Therefore, remember, if supplier's name is given in the question, it is credit transaction. And if supplier's name is not there, the meaning is goods are purchased for cash. Now, by keeping all these points in mind, let us solve one problem. See, question is given like this. From the following particulars, prepare purchase book. And all these are what? Financial business transactions. All transactions are related to purchases. When in January month, there are some transactions. First one, purchased goods from Gopi. Whenever you see purchase transaction, you should observe 2 points. First one is what? What we have purchased, goods or fixed asset. If we buy any fixed asset, that name will be given in the question. Like purchased machinery, purchased building, purchased land, purchased furniture. Observe, any fixed asset name is given here? No. And clearly is giving that we bought goods. And second step is what? How we purchase these goods? We should observe. Purchased goods from Gopi. Who is this Gopi? Supplier. Supplier's name is given in the question. Means this is credit purchases. Goods are purchased on credit basis. Means we should take that transaction here. Right. Now, how to record these transactions in purchase book? Let us see. First transaction is what? Purchased goods from Gopi. We should observe 2 points here. First one is what we have purchased, goods or fixed asset. Clearly is giving that goods are purchased. Okay. Then second point is we should observe how we purchase these goods, for cash or on credit basis. Purchased goods from Gopi. Who is Gopi? Supplier. When supplier name is given, then what is the meaning of that? It is credit purchases. Means we should record that. Now how we should record? In date column, transaction date we should write. And in particulars column, directly we have to write Gopi, supplier's name. And in inward invoice number, we should write invoice number. For example, 1. LF number. What is this? Say in ledger. This transaction is there, no? Where this transaction is posted? In ledger book. In 50 page, we posted this transaction in Gopi account. Then that page number we should mention here. Since you are a student, since there are no books with you, you need not to write anything in LF number. Then in amount column, we should write this 5,000 rupees. Then, see, while recording the transaction, what is the difference between subsidiary book and journal? You should observe. If we maintain journal, how we record this transaction? Date column, we write transaction date, and in particulars column, we write the journal entry. What is the journal entry for this? Purchases account debtor to Gopi account. Amount is 5,000 rupees, 5,000 rupees. Now, full entry we supposed to write. Again and again we have to debit purchases account. But once you observe here, are we writing full entry? No. Do we need to write the narration? Being goods are purchased on credit? No. Simply date, supplier's name, amount. That's it. That is the facility of maintaining subsidiary books. Then, what is meant by inward invoice number? Let us see. When seller sells goods to customer, then along with the goods, seller prepares one document. Assume that seller is selling to customer for cash. Then what he gives to us? Bill. Bill contains what? Everybody knows. The details of goods sold. But assume that seller is selling the goods to customer on credit basis. Since cash is not coming, we cannot give a bill to customer. Then in the place of bill, seller prepares invoice. Clear? Always keep in mind who prepares invoice? Seller. Because invoice contains what? The details of goods sold. Who knows about the goods? Seller only, not the buyer. Then, why we are writing inward invoice number? Why we are adding inward word there? Let us see. Ours is one firm. We purchased goods from Gopi. So Gopi is who? He is a supplier. He is a seller here. Okay? Who issues invoice? Seller only. Gopi only. Gopi prepared one invoice and he issued that invoice to us. When you are preparing accounts, you know very well, you should think from firm's point of view. Then to the firm, this invoice is coming. Therefore, we should write inward. Now, why we are writing number word? Let us see. Total purchased goods value is 5,000. What we have purchased there? We purchased 100 boxes of medicines at the rate of 3,000 rupees and 200 boxes of cellotapes at the rate of 2,000 rupees, like that. Then can we write all those details in purchase book? Impossible. It becomes bulky. So what we do, when we receive that invoice, we preserve that. we maintain a file, we give serial numbers to all those invoices and we preserve them. If you want to know the details of these 5000 goods, then open that inward invoice file, take that first invoice number, there you can get that information. In question, since invoice numbers are not given, we have to write 1, 2, 3, 4. Sometimes he may give invoice numbers. Then write down that number only. Then, second transaction is purchased goods from Kiran. First one, 2 points we should observe now. What we have purchased? Goods. Okay. And how we bought them? Supplier's name is given. Therefore, it is credit purchases. Means we should take this. Transaction date is 6th. Supplier's name Kiran. Invoice number 2. But there is one new point here. Trade discount 10%. What is trade discount? Let us see. Discount is of two types. Trade discount, cash discount. Trade discount means what? In commerce, you have learned the meaning of trade. Trade means what? Exchange of goods and services. Nothing but selling and buying goods and services is known as trade. For example, a seller is selling goods to one customer. Customer is purchasing those goods in huge quantity. Since he is buying in bulk, generally he asks for some discount. Assume that on that product we mentioned 100 rupees as price. This is called catalog price. Since he is our regular customer, then what we do? We may give some discount to customer. That discount is known as trade discount. Assume that seller is giving 10% trade discount to customer. Then 10% of 100 rupee is how much? 10 rupee. Then finally how much customer supposed to pay? Only 90 rupees. Be clear with this. Trade discount means what? While buying the goods, if a seller offers any discount to customer, the discount is known as trade discount. And we need not to show the trade discount in the books, because finally at what rate we are getting that product, if you show that amount, that is enough. Clear? Then what is meant by cash discount? Let us see. Firm sold goods to customer. Goods value is 5,000 rupees and we sold to customer on credit basis. Customer asked 30 days credit period. We allowed it. So after 30 days, if customer pays the amount, total 5,000 he should pay. But assume that we need cash after 10 days only. Some unexpected urgency came. Now we cannot ask to customer because already we have given 30 days period to him. But we want to motivate that person to pay that amount before the due date of the transaction. Then what we do? We go to him with one proposal. You should pay after 30 days, but if you pay on this date, after 10 days, then we will offer some discount to you. For example, 2% discount we are ready to give. Then assume customer is having the money. Then he wants to pay that amount, he wants to clear off the due. Then he need not to pay total 5,000 rupees. 5,000 rupee into 2% will be 100 rupees. Then 100 rupee will be deducted from this. If he pays 4,900 rupees, then his account will be settled. Then this 100 rupees. So what is meant by cash discount? In the event of settlement of debts, if a debtor pays the due amount before the due date of the transaction, then when creditor allows some discount to debtor, that discount is known as cash discount. Where we show cash discounts? In triple column cash book. You know, in triple column cash book, debit side we are writing discount allowed, and credit side we write discount received. These two discounts come under cash discounts. Now in books, trade discount we need not to show, because finally how much we paid, that only we should show, and we show cash discount. Clear? Then in present transaction, since a trade discount is given, then the transaction amount 1000 rupee we should not write in outer column. In inner column, in particulars column, write down that 1000 minus trade discount. We should calculate on 1000 rupees 10% is the discount. Then how much it will be? 100 rupees. Deduct that, and the remaining 900 rupees you should write in amount column. I don't know, we need not to show the trade discount in the books. Means in amount column I am not writing trade discount 100 rupee. Then next transaction is bought goods from Joshi. Bought means purchased. Here what we are buying, that information is not given. Then generally what we buy? Goods. If you take stationery shop, time to time they purchase stationery items. Rarely they buy fixed assets. For example, fan is damaged, then they buy a new fan. Is it a recurring transaction? No, rare transaction. Therefore remember, when there is no proper information regarding what they are buying, our assumption is they are buying goods. Right. Goods we are buying. For cash or on credit basis? See, Joshi, supplier's name is given. When supplier's name is given, it is on credit basis. Means we should take that. Date is 7. Then supplier's name is Joshi. Invoice number 3, and there is no trade discount. Therefore, write down the transaction amount in amount column. Then next one, 12th date. Purchases 3,500. First of all, what they are buying, there is no information. Then our assumption is they bought goods. And how they are buying? Supplier's name is given? No. When supplier's name is not there, what is the meaning of that? We need not to remember the supplier's name. When we need not to remember the supplier's name? In case of cash purchases. Therefore, it comes under cash purchase. Where we should record cash purchases? In cash book. We are preparing purchase book at present, so don't record in this book. Ignore this transaction. Then next one is also same. Clearly is giving cash purchases. Goods are purchased for cash. We should not record that. Then next one, purchased goods from Rajesh for cash. Even though supplier's name is given, clearly is mentioning that we bought for cash. Since it is cash transaction, it goes in cash book. Therefore, ignore. Then next one, purchased machinery. What we are buying? Fixed asset. If we purchase fixed asset for cash, it goes in cash book. If we buy on credit, it goes in journal proper. So anyhow, it is not going to come in purchase book. Therefore, ignore this transaction. Remember, if there is any fixed asset name, you need not to waste your time by thinking it is purchased on cash, it is purchased for cash or credit. Simply ignore it. Then next one, purchased furniture from Mahipal. See, furniture, fixed asset name is there. So what to do? Simply ignore it. Then purchased goods from Rampal. Goods are bought, supplier's name is given, means it is credit purchases. Therefore, we should record it. Invoice number 4 and amount. See, here also trade discount is given. But observe the difference between these two. On 6th date, trade discount is given in the percentage form, 10%. So we calculated and we wrote. But here trade discount is given directly. We need not to calculate. So in inner column, take the transaction amount minus trade discount. We need not to calculate, directly write down the discount amount here and the remaining amount in outer column. How much it is? 5,800 rupees. Clear? Then we entered all the transactions in purchase book. Next, what to do? Amount columns you have to total. $18,700 is what? This is total credit purchase of goods for the month of January in 2018. In particulars column, write down total word. Clear? In this manner, we should prepare purchase book. Then, what we did? We recorded purchase transactions in subsidiary book. Recording work is completed. Now next step is what? Classification. In which book we classify? Ledger. So let us see how to post these transactions in ledger book. First, we open purchase account and assume that in January month, total 500 purchase transactions are there. If you maintain journal book, all those 500 transactions we should record here in the form of journal entries. 500 transactions one by one we should post in purchase account. 500 times. 2 cash, 2x, 2y, like that. Time waste. But the facility of subsidiary book is you need not to post individual amounts in purchase account. Total purchase value is 18,700 rupees. That amount directly we can post here. Which side? Remember some points. Purchases is an expenditure. Expenditure comes under nominal account. What is nominal account rule? Debit all expenses, losses, credit all incomes and gains. Since a purchase is an expenditure for us, that account shows a debit balance. Therefore, the total amount we should record in debit side. What should be the date? Last date of the month. 31st January 2018. What to write? Individual amounts we are not posting now. Therefore, don't write Gopi, Kiran, Joshi like that here. What we should write is to sundries as per purchase book. Sundries means what? various amounts. Instead of recording all these individual transactions, by simply writing sundries word, we are recording all of them at a time. So only one time if you post here, that is enough. Need not to post for 500 times. That is the real advantage of maintaining subsidiary books. Clear? Then, next what to do? Balance it. Which side total is more? Debit side total is more. Therefore, credit side on 31st January 2018 by balance carried down. Debit total minus credit total. And before writing the balance, remember one more point. In debit side, we wrote credit purchase value. But in any organization, not only credit purchases, cash purchases are also common. That cash purchases are also there in cash book. From purchase book, we are taking credit purchase value here. Similarly, from cash book, we should take cash purchase value also. For example, goods purchased for cash 5,000 rupees. What is the entry? Purchases account debtor to cash account. In purchase account, that entry also we have to post. Which side? Purchases are in debit. So debit side to cash 5,000 rupees. Now total is 23,700 rupees. Now purchase account balance carried down amount is 23,700. In this manner, we should prepare purchase account. So remember, when we are maintaining subsidiary books and while preparing purchase account, credit purchases you should take from subsidiary book, purchase book, and cash purchases you should separately record. Don't think that purchase account contains only credit purchases. Then next what happens? Individual supplier accounts also we should open here. First one, who is the supplier here? Gopi. Then with his name, open one account. Similarly, Kiran. Kiran account we should open. Then Joshi account we should open. Rampal account we should open one by one. In individual accounts, how to post this? One should recollect the journal entry. Purchased goods from Gopi. What is the entry? Purchases account debtor to Gopi account. In purchase account debit side we posted that, and in Gopi account credit side we should post. In date column, write down the transaction date. Start with by. What to write? Other account name, that is purchases account, and amount is not the total. Only Gopi related transaction amount. Amount is 5,000 rupees. Similarly, in Kiran account, by purchases, final amount is 900 rupees. In Joshi account, by purchases, 7,000 rupees. Remember this. How to post? In purchase account debit side we should post, and in individual supplier accounts credit side we should post all these transactions. With this, purchase book topic is completed. The continuation part is sales book.